Hey, it's Elaine. This is episode 378 of the Orange Pill Investor. And it seems like I think everybody's just been staring at the Bitcoin price, waiting for the Mandel candle. And this ain't going to be a technical analysis video or anything, but it is nice to see some up and to the right. Got some higher highs and some higher lows. But if you draw another little magic line going down here, uh, you know, is Bitcoin going to get rejected at 90? Or are we gonna get some clearance to return to 100K again? But I'm just anxious. I've been chomping at the bit to get back to collecting some theta, and I think I closed my positions down around 276 March 14th. Yeah, it was like right around here. I think I closed my positions somewhere between 11 and 1 p.m. And so, I've been just watching Theta to kind of decay for the last couple of weeks, but was rewarded. So we're up from, I think we closed at like 300, 297, something like that. Yeah. And so up about, well, before we were up about 10% from there. So that's pretty cool. And I'm always reminded of this penny stock trader that I used to follow, Quick Fingers Luke. Um, he turned like shitcoin trader. They were very similar, like altcoins and penny stocks. And one of the things that he always said was you have to participate in the bounce. Um, a 10% move isn't like isn't earth shattering, but it feels pretty damn good looking at the last 3 months. It's a little bit of a welcome rally. So 24% in the last month. So I'm definitely going to add some covered calls in here. I don't know. I'm just going to go crazy. But definitely need to take a look at my June 1080s. These are 2 days overdue, right? So 90 days, I really need to start deciding what I'm going to do with them. And I've already made my peace with these that, make these smaller. I've already made my peace with that. These are probably losers. Well, that's too big. And so now it's just kind of like, do I let them die a noble death and just hold them for another month to see if we get anything? And but see, my purchase price, if somebody was been buying these, over the last month, they might be okay with these. But my cost basis is 2,400. So there's no way in hell I'm getting even Stevens on these. So I'm already just assuming these are losers. And so I have to decide what to do with them. Do I just close them out and take a loss? Do I roll them out to like September? And the only problem with rolling them out, let's see, I've got 20 of them and they're worth between, 177. So 10 of them would give me 1,700. If I close all of these, it would give me about 3,400 to play with. I'm only going to be able to buy like 4 or 5 of the Septembers. And so I'll be trading, I'll be rolling out and getting more time, but I will be trading away a bunch of delta. Because even though the 0.03 delta per contract on these 1080s is pretty small, it's going to be even smaller. Uh, let's see, 20 of them times 0.03 gives me like 60 delta. So I'm controlling the price action on 60 shares here. And if I spend that 3,500 bucks on really between 4 and 5 of these, that's only gonna get me between 36 and 45 delta. So everything in options is a trade-off. Theta is really starting to kick in on these June 1080s, but there ain't much left anyway. So let me go ahead and do the things that I know I'm gonna do first, and then I'll figure that out later. All right, so I've got my December 200 leaps. Do I want to just completely take profits, or do I want to sell covered calls against these? I don't really think this is like a super amazing rally that I need to just cut bait on these, but I could close them both, take my 30 grand and buy 100 shares. This would give me way less delta, but it would take away some of the drag on the account. But I think for now, maybe I'll just go ahead and sell the covered calls against all of my leaps positions. Um, we can say that I've been fasting on covered calls for the last 10 days since the blood moon. So let's just go ahead and do that. That was a 200 strike, and it's worth about 156. So as long as I'm above the 356 strike ish, I should be good to go. Unfortunately, I'd like to get the May 9th date sold, and they haven't populated it yet. And the other unfortunate thing about that is a lot of times they won't necessarily populate that. When it is populated, they might not give you the strikes you want anyway. So I'm inclined to just go ahead and go out here to May. And let's see how high I can go. I can go to the 445s if I want to be very cautious about the price. Or I could go as low as like 400. This little line right here, I believe, is what Tasty Trade is calculating as the expected move by May 2nd, like somewhere in between 260 and 385. I don't know how they calculate it, but it's just inside the one standard deviation line at 415. So maybe I'll even go outside of the one standard deviation and I'll just sell two of the 425s. Let's do that. Let's remember to turn the volume down first this time. Pair these up so that I can keep everything straight. All right. The 250s are almost to break even here. And if I add my long strike to the value, that gets me to about 381. So as long as I'm selling the 380 strike or higher, this should be a quote unquote safe poor man's covered call. And in this one, I think I'm probably, just so that I can keep the strikes separate, I'm going to go a little bit higher. let's do the 435s. And then my last set, I'll do 445. The lower the strike on my long call, the more comfortable I am selling a lower strike. And so these 250s, they're not deltas on these are 0.77, so that's pretty legit. But once I get to these 300s that are barely in the money, most poor man's covered call sellers try to keep their long call at least a point 0.7 delta, and you can see I'm like almost there. So I'm going to be the least conservative selling poor man's covered calls against my 200s, and then as my long call gets higher and higher strikes, I'm going to be more and more conservative. So I've got, holy shit, I've got 7 of these. All right, 7. And let's pair them up. And last one's these 300s that are barely even qualify as poor man's covered calls, just barely in the money. 0.69 is cutting it kind of close. And so for this one, if I add the 300 to its value, I get to 406. So I would want to be selling at least the 406 approximately strike. You can actually drop this down by whatever premium you're collecting. So since I'm collecting 600 bucks on these, I could really probably go down to the 400 strikes if I wanted to. But how many do I have? 3. All right, that's giving me a little bit of cash to play with. Ivy rank is still pretty low, so I don't think it's going to be like an amazing time to sell any of my long calls. But any that are in profit, I could go ahead and do that. Even these December 19s that are break even. Another thing that that guy Quick Fingers Luke used to say was that if you can break even on a trade, just consider that a winning trade. And I think what he meant by that is so many people lose money that if you can just manage to not lose any money, you're already kind of better than average, which is kind of wild to think about. But I could peel off some of these Septembers for profit. These 1080s are like, I'm not feeling any pressure on the Septembers, but if I wanted to take some profits, I absolutely could here. I wouldn't necessarily sell them all, but if I wanted to take off some leverage and buy some shares back, this could be an opportunity to do that, or to just say, you know what, this might be the best I can do on my long calls. So should I just accept reality, or do I just want to let these go another 2 to 3 weeks? Like rolling these Junes out to September, I'm trading delta for a lower theta. That's basically all that's doing. And the market loves to punish. So if I do close these and roll to Septembers and we do get some kind of quick pump to 400 a share, the Septembers will not appreciate like the Junes. Um, as you get closer to expiration, gamma's going to start becoming more and more, it's going to affect the options more. So, okay, let's take a look here. Do I want to sell Any covered calls against shares. So I'm still I have an extremely negative, net theta account here. So I am kind of tempted to take off some more leverage. This account is it's not exactly diverse, and I have been itching to add a Tesla position. So what would it cost me to set up a poor man's covered call in Tesla? Let's take a look. March. If I go down to the 200 strike, that's gonna cost me about 10 grand. I'm almost there. And then let's see, the 200 strike was 10, so that's whoops, not June, March. So I would have to sell at least the 308 approximately. What can I get? 310, I can get about 1,200 bucks. Which would actually give me the cash I need, I think. All right, let's do that. Buying the 200. And I am selling. What did I say I was selling? The three. Let's do 325. No, 315. All right, I'm still using $650 worth of margin, so I have to take care of that. So I can either sell a long call position, like if I want to take a small profit in my Septembers, or I can just sell another covered call, maybe against my shares. Just to keep them separate, let's do the 440. All right. I have no margin use. This account is still extremely has a serious theta drag on it. So this does not qualify as an option seller's account. I cannot show my face at the option sellers convention at this point with this portfolio. But I got this little dipping my toe into diversification, I suppose. Where's my yeah, here we go. Let's highlight. Okay, that's annoying. Yay me. I have two positions. I've reached max diversification. All right. I think I'm good to go in this account. If we get like later in the day, if we get some kind of another rush to like 350 or something, I'll come in, add a few more positions. I'm still down like uh 15, 16, 17 grand, something like that against MSTY, but the gap is closing. I might actually need a pump to 350, 375. I thought 325 might do it, but it didn't. Probably be man, we'll get there, but probably because that at the money covered call that I sold at 300 on Friday is gonna be completely underwater. So I'll be paying to roll that, I hope. All right, let's take a look at the chat before I move on to the next account. What's up, Rico? What's up, Howard? We got a celebrity appearance in the chat today. What's up, Ben? Yeah, yeah. I'll make sure to keep trying weekend after weekend until I get a fill. Magic Pete, we ready for the moon? I am ready. I've been ready. Yeah, it was funny when I went live on Saturday and I was like, why is March 21st missing? Like, why is my expiration date missing? I thought there was a glitch in the matrix or something. And then somebody was like, "Oh, hey, I caught you live on a Saturday." And I'm like, "It's fucking Saturday?" Retired life, it's hard to keep track. Yeah, we definitely need some 24/7 strategy trading. I would never sleep again. What's up, Deck? So why use the web app? The reason is because the I actually prefer to trade on the desktop app. However, it's too small. I can scroll and make the web browser bigger for the videos. How do you label the trades? So you click and highlight, and then you can either hit the actions button and then choose group positions, or you can just right click it and choose group positions, give it a name, and you're good to go. And then when you're done with it, you can just ungroup or you can rename it. I forget who suggested that to me, but um, I actually learned that from paying attention to the chat. What's up, Kanal? Let's see, joined late. Not sure if you already waxed poetic about the July 1080s and management strategy. Actually, let me go back there now that you mention it, because I think I have some Julys here too. I mostly talked about the Junes, but yeah. So I don't know what your cost basis is on these July 1080s, but since I've got 116 days to expiration, I'm gonna probably watch them until they get to 90. And actually, that reminds me, I think my final decision on the Junes is I'll probably just wait another week to the end of the month. And if some amazing shit happens and Bitcoin decides that, the market gods decide that they want strategy to get into the S&P 500 in Q1, or based on earnings in Q1, and we get some kind of crazy spike end of the year rally, I think I'm just going to watch these Junes until next Friday. And the Julys, I'm severely underwater on these. What am I down 70%? Um, my strategy from the very beginning on these was to continue to roll them every 90 days. So I've got 26 days left on these to watch. Um, if someone else had a more favorable entry price, like if you got in at like $2 or something and you're in profit, absolutely, it might make sense. Or if you think, you know what, this is the best, this is the best it's going to get, the bull market's over. I mean, anybody could just take their lumps and move on from here if they wanted to. But I'm just going to stick with my original strategy when I opened these 66 days ago, is that I'm going to roll them every 90 days. And in 26 days, when I roll my Julys, I will either roll them out if I'm still bullish, or I will close them for a loss and just take my lumps. um, or maybe I convert. This is because I'm going to be in a similar situation. 10 of these will get me about 3 grand, and I've got 60 of them. So that's 18 grand worth. If I go out and try to roll these to September, I'm only going to be able to get 10 is 17. So around 20, a little more than 20 contracts. If I roll my 60 Julys out to September, I'm only going to be able to get about a third of the number of contracts, which is going to reduce my delta exposure significantly. So for my July 1080s, for now, I'm just sitting on my hands for another 26 days and just waiting, waiting for something amazing to happen. Deeply, let's see. Have you considered any of the strategies that Jay mentioned in the Yield Max video with the protective calls in this climate? You have to remind me about that one. I did watch that whole video. I thought he was talking about protective puts, like adding collars to the covered calls. Like, um, I I don't see myself, if that's what you mean. I don't see myself buying puts. Oh, protective calls. So actually, no, I think I might get it. So I think what he was talking about was buying long calls to protect against the upside, and that's, if that's what you mean, that's literally what I've been doing. Um, like in this particular account, I've got these poor man's covered calls set up, and if we, wow, actually, they're almost, these damn things are almost in the money. So if these go in the money, I stop losing upside, right? My upside is was capped at 325 13 days ago when I opened this position. But I have all of these long calls that have unlimited upside. So if you mean buying protective calls to make up for losing out on unlimited upside here, then yeah, I that is exactly what I've been doing. Um, as the price of strategy has been cratering from all-time highs down to 50% off all-time highs. Um, I've been trying to stack more and more of these positions, um, which has made it very hard to keep a positive net theta here because I've added so many of these long calls. Let's see, these Septembers are barely in profit. As far as these are concerned, I've already made my bed when I open this position. And here's I'm talking this this 325 call just flipped to in the money. So that's kind of cool to see in real time. Um, some people get freaked out about this. As soon as their short call goes in the money, they're like, "Oh my god, is somebody going to exercise on me?" This them thing has 32 days left on it. I don't think that's much of a concern. Um, and I think That's one pitfall that new option sellers fall into is they they panic roll. So, if you're gonna make a decision to roll this, that's fine, but the decision shouldn't be made based on fear, just because my strike is getting threatened. The fact that I've had it open for 13 days, if I wanna roll this out to collect more theta, that is a rational reason to roll it, and so if I did wanna roll this position, let's see what could possibly what I could possibly get. If I wanna roll this out from 32 days to see, um, because May 9th is not available, I can't even roll it out 2 weeks, so I'd have to actually roll it out 3 weeks to, to May 16th, and I wouldn't necessarily wanna roll it out um, to 325. Like, how high of a strike could I get and still collect a small see, I'm already into a debit. Um, tiny, tiny credit, rolling for basically even Stevens. I could roll this up to the 350. So this I kinda don't have a problem with really. Like anywhere between 350 and 325, as long as I'm not breaking even here, I would be kind of okay with this. But if that's the case, I would almost rather just cut bait on these and go back to shares, right? I could take my lumps and pay $1,400 to close this position, and then I could close one of my long calls and book, what, 6 grand in profits. So closing this by itself would give me about 6 grand in profit, but I've gotta subtract the 1,400 for a net profit of about 4,500. That kinda makes sense, and, but I kinda don't think that, that's really worth it to me at this point. I've got 3 of the Decembers. That adds up to about 1.2 delta, so I could sell a covered call against this position. Selling a covered call against this position would be pretty difficult. It's not that close to point 0.7, but again, this negative theta is kind of annoying. So maybe I will add 1 covered call here as well. Let's do 39 days to expiration, and I'm just gonna go right to the top of the chart. This is the least aggressive strike that I can get there. Gives me a little bit of cash to play with. Let's group. I'm gonna call this, I don't know if it's technically correct, but I'm gonna call it a ratio spread. Because this 530 individually is not enough delta to sell a covered calls against, I'm basically combining 3 longs with 1 short, and that should be fine. It only gives me about 600 bucks to play with. I'm not really in a rush to spend that. I could buy a share or 2, but, even selling that covered call, I still have a ton of ton of unlimited upside here. I could take profits on some of these Septembers. That's like 10-20%, which actually is not terrible, right? Making 20% profit in 27 days. But I think I'll stand pat there. All right, let me check the chats again before I move on to the challenge account. What's up, Rob? Yeah, I'm hoping we do. I'm definitely hoping we get a pump to 350. If we get back to all-time highs again, what are we gonna be back to 400, 450 on strategy? So that would be pretty sweet. MSTR Owl, see, do you think we get the S&P 500 qualification in March? I am not optimistic. I mean, Bitcoin can do whatever the hell it wants, anytime it wants. And I'm not exactly a superstitious person, but when I worked in the medical labs, if you're working on a Friday night or a freaking full moon or whatever, you'd like want to kick the crap out of somebody if they came in and said, "Hey, kind of slow tonight, right?" Like, don't say that shit. You're just begging to get freaking 5 ambulances in all at once. Um, if I mean, what do we got to get? Somewhere in mid 90s or something. So, I mean, that's only right another 10%, a little over 10% in a week. Bitcoin can do that easily. So I think it's a coin flip. It's probably a little bit less than a coin flip. I guess I'm giving us a 35 to 40% chance of getting in Q1, which would be, disappointing for 3 months, but it's whatever. Victor, watch the recording of your MSTA and MSTY analysis over the weekend. Great stuff. They do have 74,165 synthetic longs. Represents 2 billion in notional strategy. So they have 100% exposure with respect to their total assets under management. Okay, good clarification there because I was wondering about that. Um, I guess that's how they get around the rule of like if they just wanted to buy straight shares, they could only buy 25%. So for them buying that much, that many synthetics, so they're 100% all in. Okay, so that makes sense. Appreciate that. Group positions isn't available in the desktop app. Um, pretty sure. Let me try to load that up. Deeply, basically, Jay was saying in addition to selling the calls, he would add a call above the strike price. Yeah, that makes sense. I've got a I've got a metric shit ton of those. Rob's account shows what MSTY is doing, like selling 320 covered calls and adding a protective long. Can't remember specifically. Yeah, I think that sounds about right. Okay, so Dr. Van Nostrand says we got to get to 97. Yeah, I mean, it can easily do that, but that's probably more than a coin flip, right? Getting to 90 by next week is like a coin flip. Getting to 97 is like we need to flip heads a couple of times in a row to get there, right? So we've got to break all the way through this level here. I mean, I hope it happens. There's got to be some feel good in the air because strategy just went over 500,000 Bitcoin. So that's bullish. All right, let me try to sign into this thing. All right, yeah. So this is the challenge account. So no, it's not the challenge. This is my allowance. Where's the Did I lose an account? Main account, Misty, joint account. This is my allowance. Where's the, I might have to reload. Anyway, same situation here. This one is a 0.61 delta. And so maybe this is going to be pretty difficult to find a strike. So adding these two together gets me to like 437. So yeah, let's just do that. Yeah, I still have a negative net theta here. Unfortunate. You know, let me see if I'm, here we go. Where is my other account? Which one am I trading now? 26. I forgot how to even look at this frickin' at the desktop app since I haven't been trading it. All right, here's positions. This is a grouping here, so let's ungroup positions. And I've got both highlighted. Group positions. Oh, you know what? So what you may not have the option because you have to set this to custom. If you have this set to anything other than custom, group positions is not available. I think that's probably it. Let's do symbol. Yep. So make sure your group by is custom, and then that should allow you to groups. That should answer that question, M. All righty, let's refresh. Maybe I have to make this smaller. So I have an account missing. uh, that's quite annoying. And it's my challenge account. Let me pull this off the screen here for a second. Accounts. Oh, I unchecked it like a goober. Okay. So if you go into settings under accounts where you can toggle privacy mode on and off, you can also decide which accounts you want to display. And apparently I misclicked and unselected my account. There we go. So now this the challenge account is available. That was going to be kind of annoying if my account disappeared. Oh, damn it. I meant to minimize this so everything would be full screen. All right, well. Okay, so yeah, so you can see my 300 strike is getting blown out. So rip to this one. I hope it expires $50 out of the money or in the money. That would be nice. Um Again, I'm not going to panic roll this at all. This is expected, right? Um and the reason is because if I roll this to 325 or higher, and then the price comes back down to 300, now I will have paid, 2,800 to roll it up, and I'm only gonna be able to collect, even if I roll it up at the money, I'm gonna pay 2,700, I'm gonna get paid 1,000, and then if the price goes back to 300 by the end of the week, I will have just thrown away, lit $1,700 on fire. Um, I'm not worried about this even getting exercised until maybe like Thursday afternoon, Friday morning. I've only been exercised earlier than 1 day before expiration, like once, like maybe on a Wednesday before expiration. If this went somehow to like, I don't know, $600 a share, then yeah, somebody might exercise this thing right away because they just want the shares, I suppose. But this isn't anything that I really worry about on a Monday. Um, so the only thing that I would potentially do in this account, I can't take profits in my Julys. I could take a tiny profit in my Aprils if I wanted to. I'm sorry, I'm sorry, those are short. Yeah, these are break even. September's are break even. But my poor man's covered calls, if I want to take off leverage and rotate back into shares, I could close these positions. If I do that, it's gonna make it a lot easier for me to maintain a positive theta, and so that is kind of tempting. If I close these, what would be a net profit of 161 minus the 1,600, 151, 145. 145 times 2, 290. That would give me 29 grand to spend. I could probably get enough money to sell another covered call, but that just means that actually I can just leave this one open. I can close one of the covered calls, both of the leaps, and then buy enough shares. Yeah, I think that's the way to go here. Let me group these again. I thought these were grouped. If I lost my groupings. I'm gonna close one default quantity here. 15 grand. And then I'm going to close my other long by itself. And I need 74 shares. So let's see if I can get 74 shares here with my. That's going to cost me 24 grand. And I've got 31. That works. And so since I didn't close those in a 1-to-1 ratio, I'm going to actually have to keep, let's see, I got these poor man's covered calls paired up. And so now I have 200 shares and I've got my weekly covered call for 300. And I've got this April 17th, which has 24 days to expiration left on it. This is ready to roll, actually. Or should I wait till tomorrow? Hmm. Yeah, I hate not being able to roll to 45 days. So maybe I'll wait. Um, May 9th will probably be made available later in the week, maybe by Friday. So I'll wait a few more days for this one to get rolled out. All right, so what am I left with? I got 9 poor man's covered calls, 200 shares. I've got an at the money, what was an at the money covered call. This is where I'm getting the majority of my theta. This would be a negative drag on my account without it. And I've kind of transferred the covered call from my poor man's covered call over to my second 100 shares. So now what do I do with 7 grand? I don't really want to add more drag to this account. So I'm gonna buy, how many shares can I get with 7 grand? 10 is gonna cost me 3 grand. So 20-ish. 24? Nope. Let's do 22. All right. That gets me almost a quarter of a way back to the next 100 shares. And I'm basically reversing what I had done on the way down. So when I opened this account 2 months ago, I think I had like 4 to 5. I can't remember if I had 4, 5, 600 shares, whatever the hell it was. And as Strategy's price dropped, I sold the shares to add leveraged positions. And now I'm reversing that. So as Strategy goes up in price, I will be closing my leveraged positions and buying back the shares. So I'll be buying back the shares at a higher price as Strategy is going up, but I should be gaining more from selling the long calls. Um, I should be I should be able to buy more shares because the I'll be controlling more delta with the long calls. So it should kind of work out. Kind of unwinding adding all of that leverage over the last 2 months. Again, I got a bunch of Julys in this account anyway as well, Canal, and I'll just wait another 26 days on these to decide what to do with them. Uh, these are break evens. Yeah, nothing else really for me to do here, I don't think. Deeply says, I guess you're de facto doing what I was mentioning earlier. I guess I just meant deliberate grouping of protective calls with the calls to unlock, as Jay put it. Another covered call sooner. Appreciate you so much, Elaine. Yeah, yeah, I wasn't doing it deliberately. Yep. Have a great one, you too, Deeply. All right, so let's take a look at the 5K account. I thought for a second there, I thought I was going to turn it back into a 5K. Can't imagine there's much I'm going to need to do in here because I think I was fully invested. So I've got 100 shares of CLSK, Riot, and Wolf. CLSK, Riot, and Wolf. Nothing to. Mm, Yeah, I've already got my March 28th calls here. Those might just get called away. That will be fine. But for a loss. So let's just take a look at my CLSK. I've got $8 strikes, and my cost basis is probably going to be, yeah, 10 bucks. So what some people do is they will bag hold. So as CLSK was going down, if their cost basis is way up here, they start to, feel weird about selling covered calls below their cost basis because that puts you at risk to lose money. And that doesn't really bother me because as soon as you buy even a single share of stock, you might lose money. And so this will probably be a $200 loss that I will have to book on paper, right? I sold the 8, I got paid 12 cents, and if the price ends the week at 8.47, then my CLSK shares that I paid $1,000 for will get called away for 800. So that'll be a $200 loss. However, to figure out your true cost basis, I would have to go in here and look at my history. So my put assignment was here. I sold the 10.5 put for 33, which is why it brought my cost basis down to 1017. And then I sold this covered call, brought my cost basis down to 999. I had to pay to close it, so back up to 1001. Selling another one for 37 brought it down to, let's just say, 963. And then I sold another one, bringing my cost basis down to 955. So technically, I will lose 155 bucks on this when this gets called away. But I don't bag hold. It puts you at risk to end up, booking a loss. But the other thing that CLSK could do is just trade at $8 a share for the next 20 years. And so I just don't bag hold. I don't sit and wait for the price to come back. If I was super paranoid about it, I could have, instead of selling weeklies under my cost basis, I could have gone out here to, May 16th and found something above the $10 strike, 11, 12, whatever. That's perfectly fine. I just don't bother. I think it kind of all works itself out because if the price is at 850 at the end of the week, if I really want to continue to run the wheel, then I can just turn around and sell a put at the $8 strike and collect another couple bucks here and and just really not care. But those are the two ways to handle a significant drop in price, right? You sell a $10 put and then the price goes, drops another 20% down to $8. You can either bag hold, you can continue to sell your weeklies and take a risk on selling at a loss, or roll out enough time to sell above your cost basis. I I just, yeah, the one thing that I don't do generally is bag hold. Like if CLSK went down to $2 a share, I'd probably just sell the $3 the $3 covered calls out to like 45 days or something. Or if I thought, okay, well that just means CLSK is garbage, then I might just sell it all, take my loss, and find something better to trade. All right, so I got Riot, I got CLSK, I got Wolf. Wolf is really painful to trade at these low prices right now. Let's see. I've got yeah, I got two poor man's covered calls. And let's see my 1080s. These losers. So I'm barely like breaking even on these. I could peel off one of them. In an account this small, I probably shouldn't have three 1080s. uh but I've kind of already done what I wanted to do in this account. So I don't mind being a little risky with it. And what would I really do with the 300 bucks anyway? I guess I could turn around and have cash or buy a single share or something. But these 300 strike long calls, I will have to make a decision on these in the next 30 days. Maybe I'll be a little bit less aggressive and like roll one out to, maybe close both of these poor man's covered calls and then reopen a single poor man's covered call at a later date. It'll be a little bit safer to trade. So yeah, nothing to do there. What's up, Tone? Wondering about your thoughts on MSTX and long calls on it for next month for the Josh candle and pull out after it spikes and back into strategy. So that so so Bitcoin is already vol. Strategy is like 1.5 to 2x vol on top of Bitcoin. And then what'd you say, MSTX? MSTX is 2x leverage on on leverage on top of leverage. And so I hate ETFs, period, because I don't like paying management fees. But, you know, if Bitcoin does what Bitcoin always does, it like this could go nuclear. I just like if I want 2x leverage, I'll just go get a long call on strategy. Let's look at September. September's almost 180 days. And so I don't know. What's at the money? 0.6 delta. Let's look. That's almost perfect. Okay. So I could control if I want 100 delta, like if I want to control the price action on 100 shares, I could buy two of the 400 strike Septembers for $11,000, 5,400 each. And that's leveraged what? 100 shares would cost me 32,000. So I'd be spending about a third of the price to control 100 shares. So that's more than 2x leverage. The 350, that's point, yeah. Anyway, the point is if for me personally, not financial advice, of course, but if I want leverage on strategy, I'll just go out here and buy it. Um, if you want, actually, that might be like quadruple leverage. So strategies leverage, options are leverage, and MSTX is leverage. Wow, you can't even go out beyond September. So let's just do at the money. Yeah, I mean, can this make a bunch of money? I suppose. But I don't so I did that analysis on MSTY and was kind of like became unbothered by the NAV erosion. But on these leveraged products, it's a different story because when the price is doing this up down stuff, like what happened from November to December, they have to, I think, adjust their positions daily in order to continue to deliver this 2x leverage. And because they do that, when strategy goes up, you know, 10%, they have to create the same move in their product. And then when it comes back down 10%, the leverage actually loses more than it gained when it went up 10%. And when it does these up, down, up, down, up, down, up, down, up, downs, it ends up like decaying a little bit. You know, getting these big moves is one thing, and then exiting your position and having the discipline to do that. But it's kind of a struggle because you're kind of on the clock in the same way that the options are. So if you're buying an option, so this isn't supposed to be something that people hold forever anyway. It's a trading instrument. And so you're kind of on the clock with a product like this. And then to buy an option on top of that, I mean, I guess let's just see what's reasonable. MSTX. Let's see. We get a big pump. Well, yeah, if strategy nearly doubles, was this going to go up to like 4x? So what would be reasonable number here? 120? Yeah, if something amazing happens here, I guess you could make a bunch of money. But I don't know. If I want leverage on strategy, I prefer to just create it myself rather than get into these uh, leveraged ETFs that have decay and erosion over time. But maybe that's a personal preference. Thomas Brown, pimp it up. All right, looks like we're all caught up on the chat. Um, I hope this trend continues. I would love nothing other than to see 98 Bitcoin by March 31st. That would be amazeballs. That would be crazy bullish. And I just need the market gods to keep Tesla down just long enough to get my strategy pump. Like, come on now. Down from, how was Tesla really 480? That's crazy. It was down basically 50%. So 10 years, strategy in Tesla, number one and number two in the S&P 500. That's my call. All right. Thanks for everybody for tuning in.